Good morning, everybody. Welcome to another exclusive interview at Value Investors Edge Live. We're hosting Navigator Holdings, Vice President in charge of Business Development, Randy Giveans. Randy, welcome. Good morning. Thanks for joining us.
Hey, Jay. Glad to be on. Thanks again for having me.
Yeah, absolutely. This is a great way to end our exclusive fall 2023 interview series. We had 12 exclusive events, and this is just a great way to wrap things up. We're excited to hear more about Navigator. Let's start off with a recap. Last time we talked, I believe, was around January. You talked a little bit about some of the goals for this year. How have things progressed?
Yeah, frankly, it's been very good in terms of actuals versus our budget. I'll just talk for the first 6 months financials. Obviously, rates have continued to move higher, utilization's moving higher. We publicly guided on our second quarter call, which was a record in terms of EBITDA, revenue, all these metrics. 1Q, we did about 69 million in EBITDA. 2Q was 69.3 million in EBITDA. And we publicly guided then, and we're reiterating guidance that 3Q will be even better. That is counter seasonal. Historically, 3Q, there's a little bit of a pullback, a little bit of step back seasonality. But in 3Q this year, it's gone higher. And that obviously bodes well for the fourth quarter. So with that, utilization up, rates up, balance sheet clearly in the strongest shape we've ever been in. And that's really given us a lot of opportunity. We repaid all of our NOC bonds back in December, continued to pay down debt throughout this year. We did all of these share repurchases, completed that 50 million share repurchase program back in May, instituted a new $25 million share repurchase authorization, started a new return of capital policy, paid the first ever cash dividend as a publicly traded company, announced it in August, paid it in September. We renewed the fleet, right? We sold some of the oldest vessels, renewed those, taking delivery of those 5 modern vessels through the Greater Bay. And then lastly, we announced in our funding the terminal expansion on the ethylene side. So it's been a busy 2023 thus far, and more to come.
Yeah, thanks for the recap, Randy. It certainly has been quite busy and quite successful, especially on the shipping side. Pivoting a little bit, there's been some crazy stuff going on in the VLGC space. And I know you're not part of that segment. Has that trickled down at all to the midsize and some of these smaller vessels, or has that pretty much just been contained to those large VLGCs?
Yeah, there's a little bit of trickle down. So what we tell customers, or we tell investors and others, is our business is mostly insulated from Vs, right? We are never competing directly with Vs, but clearly some of the Vs trickle into the mid sizes, which can trickle into the handy sizes and vice versa. VLGCs are carrying one, maybe a second commodity, 90, I don't know, percent propane, and then a little bit of butane occasionally. And it's almost exclusively Houston to Japan or Asia, far or Northeast US over to Europe, Middle East to Asia. So it's really maybe 3 routes. Whereas for us, we have 7 commodities: ethane, ethylene, propane, propylene, butane, butadiene, and ammonia, which has gotten a lot bigger. And we are trading hundreds of routes. So our business is much more diversified and somewhat insulated from the Vs. So that's a good thing when Vs are in the doldrums. And maybe we wish it wasn't the case when Vs are earning 150,000 a day, which again, that might be one fixture. So let's not say that everyone's earning 150 for a full quarter. So yes, there has been some impact for us. Now at the Panama Canal, we use the old locks, the smaller locks. So that congestion is not really impacting us as much. That said, we have had, I think it's 2 now, cargoes coming out of Houston that have decided to go east and avoid the Panama Canal altogether. One went through the Suez, one went under South Africa, just because of the congestion down there and the drought conditions and everything else.
Yeah, certainly helpful and interesting markets and stuff to follow. Things have been going really well for you guys in 2023. It's been a good year, but whenever you have a good year or a good run of years, it's easy to get complacent. What are some risk factors and things that could kind of go wrong here that you, as part of the management team overall, and investors should be paying attention to?
Yeah, frankly, for us, it's a lot of macro issues that we don't really have control over. China, Taiwan, or a hard China landing, recession, what have you. That recession word just seems rampant for years now. We've been on a pending recession, and China's going to be invading Taiwan tomorrow for years now. Anyway, those are consistent kind of ongoing concerns. Domestically, the administration, right? It is harder to do additional production of crude and nat gas and associated gases and NGLs and LPG or permitting for projects. that would be disadvantageous for a company like us who capitalizes on lower price U.S. commodities and higher price international commodities via shipping, right, and connecting those two. So that's a risk or a concern. Clearly, the ongoing war with Russia, Ukraine, and how that continues to spill over into Western Europe and hamper their growth, Israel and Middle East tensions and potential impacts from that. So really, it's a lot of kind of big picture, global trade, kind of macro environment scenarios and risks, much more than, I don't think there's a lot of Navigator specific risks, but certainly when you are a global company with global operations, you're going to have those global risks associated with it.
Well, thanks, Randy. Hopefully, folks appreciated the discussion and things were helpful. Thanks again for joining us.
Yep. Hey, my pleasure. Thanks again. And looking forward to more updates in November and certainly the next call with you in January.
Absolutely. We'll stay tuned.